So in today's lecture, we like to explore the Sukuk financing, which has been trending in last couple of years, and in recent years, it has got a momentum, and Sukuk has become a buzzword in Islamic finance world and also the financial market as well. And for your information, the amount of Sukuk financing has reached to 200, close to 200 billion across the countries in the world in 2020. Though we hoped that it would be much greater than this amount, it was expected as well. However, due to pandemic, the expected growth was little bit slower for Sukuk financing. So in recent months, you probably, as a Bangladeshi, have come to know that one business conglomerate, large business conglomerate in Bangladesh, has got approval from the Bangladesh Securities Exchange Commission to float the Sukuk Securities, the Beximco Green Sukuk, for the first time, which is expected to raise around $30 billion. So probably 30 billion taka, not $30 billion. Yeah. So the question is now to explore that what exactly we have to understand by Sukuk, and why the Sukuk is becoming popular, and how it is to be structured, and what type of Sukuks are nowadays used by entities, and what are the challenges associated with this Sukuk financing, and which countries are leading in this Sukuk financing, these things. So we'll try to explore these things. So I know many of you are familiar with the concept of Sukuk, and if not familiar, there is no problem. You probably have at least come to know the the concept or the name of this type of Islamic finance product. So it comes from the Arabic, and it indicates something which you mean as certificate. So the question is, this certificate indicates what? So this certificate is a kind of certificate we use in case of purchasing share, purchasing bond. All these are certificate, or all these are kind of security which entitles the owner of the certificate or owner of the security some claim, some benefits in exchange for making payment. So when you are Sukuk holder, you have claim on a regular stream of payment at expected rate, and you also, it also represents that you have the ownership, proportionate ownership in assets which are which have been used to back up the Sukuk issues. So this is very plain concept. So two things you have come to know. One is you have ownership by this form of certificate. You have the ownership. Ownership in what? Ownership in some underlying asset. So I have mentioned the expected percentage rate is for you for getting the return, for getting the payment. So when I have mentioned that there is an expected rate, this expected rate is mentioned before when it is issued. So from where this profit or this return is given to you? It is given to you from the revenues which will be generated from this underlying asset. So at the end of the term of the security, or at the end of the term of the certificate, you obviously claim your principal. So how your principal will be repaid? So usually principal will be repaid by selling of this asset, or by owner of the asset will pay the principal to you as a repayment. So these are some common features of Sukuk instrument. And now the issue is how Sukuk is issued. So basic structure is that say a company which is B, this company B has some asset. So this company B requires financing. So what company B can do, company B is planning to raise financing through Sukuk. So company B can hand over or sell some of its asset for the purpose of Sukuk to a separate entity, a special purpose vehicle. You probably can recall this term I mentioned before. So company B has transferred some assets to the special purpose vehicle which has been created for issuing Sukuk. So now the asset title, the title of the asset is within the SPV, that is SPV which has been created. Now SPV will issue some securities, say the securities face value in total is 1 billion taka. So I have mentioned 1 billion taka. Now the question is, this security issuance nominal value should be equal to the asset value which is within the SPV. Now question is, from where this asset will be, how the asset will be purchased. This is a huge amount of money will be required. So 1 billion taka proceeds will be collected from the interested Sukuk buyers, and this will be paid. This will be paid by the Sukuk investors to the SPB who has issued the Sukuk, and SPB will pay to the company B. And company B has got this amount of financing, say 1 billion taka. Now, company B will be responsible to make installment payment to the SPB, and from the regular installment payment, SPB will repay the coupon payment to the Sukuk holders. And when the Sukuk will be matured, say after 4 years or after 5 years, company B will clear the principal amount or sell the assets if necessary and transfer the proceeds to SPB, and SPB will clear the principal to the Sukuk holders. Now the question is, what is the purpose of SPB? Why should SPB be invited here? So the answer is that the title of the asset which is used to back up the Sukuk securities are in the hand of SPB. And SPB, here if I write the Sukuk investors, SPB has trust agreement with the Sukuk investors. They have a trust agreement. Now, if company B fails, SPB will sell the asset and use the proceeds from selling assets to repay the due to the Sukuk investors. But if the title of the asset are in the hand of company B, Sukuk investors couldn't enjoy that amount of protection. And SPB has expertise, or SPB it creates its expertise, or it develops its expertise to issue securities, to handle the payment, and to clear the payment from the company. So this is the basic structure. So we'll give you some very specific examples. So this basic structure will be more clearer to you. I hope I am very sure that still you have confusions that how it works. So this SPB can be Islamic bank, or this SPB can also be formed by the company who is issuing, who is trying to raise financing through Sukuk. So I have mentioned that the company, Sukuk holders will get an expected rate, say 5%, 7%, or 8%. But it has to be clear that there should be no reference to the prevailing interest rate anywhere in the world. So you cannot say that I will pay from the Sukuk the bank deposit rate, average bank deposit rate plus 2%, or you cannot say interbank rate plus 5%. You cannot say, you cannot mention this. You cannot take a reference of the interest. So before discussing further, let me clear what we have mentioned in the structure before. See that the assets have been sold to the SPV, but actually the assets are firstly owned by the company B. Then in case of Ijara based Sukuk, the company B, which was owning the asset and which has sold the asset, the company B will again take it as a lease from the SPV. So you probably have, some of you have come to know about the sale and leaseback. Anyone has heard about the sale and leaseback financing? Have you heard about it? Anyone? Sale and leaseback financing, it happens in real estate business. Okay. So for example, the landowner cannot afford to construct a building on his land. So what the landowner will do, landowner will sell his land to a real estate developer, and real estate developer will construct real estate on the land, and then lease the real estate again to the landowner. And when the original landowner has taken a lease from the real estate developer, he or she will make an installment payment. It is comparable to the lease rental payment. So first of all, the sale has been made, then again the owner has taken a lease. So it is a conventional finance product, but the Sukuk is Ijara Sukuk specifically is similar to the sale and leaseback. And when the company B is selling its asset to SPV, company B agrees that I will take the asset from you on maturity. And who is issuing the security? I mean the Sukuk security, not the company which is requiring financing, the SPV entity, a special purpose vehicle. And this certificate represents what? This certificate represents undivided ownership and interest in the asset. And who have the trust agreement? Trust agreement is in between SPV and the investors. Who are the investors? Who have purchased the Sukuk securities. So Sukuk in Western world, they have understood that it is nothing. It is just a kind of fixed market. I mean the fixed income security in the conventional market. So one very common example of fixed income security is bond. So they have mentioned that it is a kind of Islamic bond. So some people have very simplistically have understood that it is nothing, just making a financial engineering, and it is very much equivalent to the bond or fixed income security in conventional bond, fixed income security in the conventional financial market. So how much they are correct, how much they are not correct? So it depends. So first of all, in case of conventional bond, so what you have learned, how to value a conventional bond, if it is a value of bond, you have to take the cash flow in numerator, periodic cash flow, and then discount it by expected return, and what you get here is a principal payment and same discounting factor. You get the value of conventional bond. Can you recall this from the Finance 101 class? Value of bond, coupon bond. Yes,
Yes,
no?
sir. Yes, sir.
Okay. So you see, when the market interest rate goes up, the value of the bond goes down. And when the market interest rate comes down, value of the bond goes up. I believe you're aware of this relationship. So which is the primary driver of the valuation of conventional bond? Primary driver.
Interest rate, sir.
The market interest rate. But in case of Sukuk, it is a fixed income security. That is very good. That is absolutely correct. But the valuation of the Sukuk bond is directly dependent on the performance of the underlying asset. Performance of the underlying asset. Now, if it is found that the asset for which the Sukuk was issued is getting higher value in the market, in that case, the Sukuk will be traded at a higher price, and the opposite is true. So it can come down, the price of the Sukuk can come down if the underlying asset are traded at a low value. So you see, in case of Sukuk, you are getting access of ownership to an asset. But in case of conventional bond, when you are purchasing it, though the payment will be indirectly dependent on the performance of asset of the issuer, but you will not have access to the ownership. You have access to a paper. You have purchased a paper. I mean, this paper is not a physical paper, it's a kind of certificate and security, and its performance is very much dependent on the variation of the market interest rate and loosely connected to the variation of performance of the issuer. And from the Sukuk security, you are expected to receive profit or income. And from the conventional bond, you are expected to receive interest. So, you know, there is a fundamental difference between these two. There is no changes in the interest. I mean, one change is possible, which is based on this, based on the agreement. I mean, which is the covenant of the bond. Bond may mention that it is a fixed rate bond or it is a floating rate bond. In that case, if it is floating, then in that case, interest rate may change. Here, the profit rate is expected, and usually the profit is marked up by some certain percentage on some reference point, and that is added. So this is how they are different. And by purchasing Sukuk, you have the ownership on the underlying asset. But by purchasing conventional bond, you receive a creditor's right. You do not have like ownership facility. So here, what can the Sukuk investors do? Sukuk investors can engage, the SPV can SPV can look for selling the asset if it is essential. But here, conventional bond, it is not available. And another critical difference, which is often overlooked between conventional bond and Sukuk, is that conventional bond can be issued to finance shariah incompliant products and services or shariah incompliant assets. However, it is not possible by Sukuk, as Sukuk is an Islamic finance product. And in case of Sukuk and also in conventional bond, both fixed rate and floating rate are possible. And other value additive facilities are available in Sukuk, which are not available in conventional bond. So we can make a broad classification of the shariah contract. We probably have come to know some of these instruments earlier. So if it is Murabaha, Istisna, Ijara, Salam, these contracts are contract of exchange. You probably can recall the Musharaka, Mudaraba, which are all contract of participation. But one contract that is distinctive, where we saw that Islamic banks engage themselves as agent of the depositors. We saw that a structure is possible when Islamic banks collect deposit as a wakala deposit. So if we stretch this classification to the Sukuk, we will get some asset-based Sukuk, some asset-backed Sukuk, some hybrid Sukuk. So in today's class, we will try to concentrate on some asset-based Sukuk. Three types. Let me highlight from here. One is Ijara Sukuk. Another one is Salam Sukuk. Another one is Istisna Sukuk. So let me show you some statistics. These are statistics of 2012. I will show you some latest statistics of global Sukuk issuance. It is the number of Sukuk issues. You see that it was trending upward, and for last 8 years, the same trend continued. But I couldn't find the number of Sukuk issues, this data, so I didn't update it. But I have updated this figure for 2 latest years. You see there is a gap. So in 2012, it was 155.3 billion. But now it is close to 200 billion. It is of 2019 figure. And you see that there is a very sharp positive trend. of the value of Sukuk issuance. And in terms of the issuing country, you see which country is dominant. The Malaysia is dominant, though it is the figure of 2012. Now, if you ask me what is happening in 2020, the answer remains same. Malaysia is the leading in the Sukuk issuance, and Malaysia is followed by Bahrain, UAE, GCC countries, Saudi Arabia, and you have to be happy that some Western countries have started issuing Sukuk because they have found it very attractive type of securities. And in terms of denomination currency, the currency which is taking the largest share, that is the ringgit. You probably are aware of that Malaysia has their currency as a ringgit. So these banks are leading in arranging the Sukuk. You probably can recall the SPB. So SPB, when SPB is created, SPB takes the help of Islamic bank, or SPB takes help of the conventional bank, which also provide the Islamic banking services, and they work as a arranger for issuing Sukuk. So before discussing the specific type of Sukuk, let me show you a summary document of the Sukuk recently issued by the Beximco in our country. So then we'll explore a specific three specific Sukuk instruments. So I have mentioned 30 billion taka. So this Sukuk has, you see my screen? You see my PDF
Yes,
screen?
sir.
Okay.
Yes, sir.
Okay. So this Sukuk has been titled as Beximco Green Sukuk Al Istisna. So there are three information, not three, four information. You see the Beximco. So Beximco is the company which will use the proceeds to be raised from this Sukuk. That's why you see this name Beximco here. And you have seen the mode of financing is Sukuk, and it is green. Why it is green? Because the proceeds will be used for financing two projects, two types of project, actually three projects. So one project is their textile. Another project is solar power generation of power using the solar technology. So they have claimed that both types of their projects are green projects. So that's why they have mentioned that their Sukuk will be kind of green Sukuk. So you have to learn that Sukuk can be green, Sukuk can be blue, Sukuk can be Sukuk can be climate Sukuk. So you see that when you are issuing green Sukuk, you are concerned about the climate changes. You are making sure that you are not doing something which will be injurious to the climate. And based on this type of classification, Sukuk can have more classifications. So that is not in our today's lecture. And Al Istisna. So have you heard about this financing product name from our class? Can you recall that in Islamic finance product, Islamic financing products, We talked about Salam, we talked about Ijara, we talked about Murabaha. Can we recall that class? Musharaka, diminishing Musharaka. Can you recall that class?
Yes, sir.
Okay, in that class, I skipped one financing instrument. I encouraged you to go to that product, that is Istisna. So Istisna is another Islamic financing instrument. So this Sukuk has been issued based on this Istisna financing mechanism. So you have got how many information? You have got 4 information from here up to. Okay, then next, BDT 30 billion, it is the issue size. So if I ask you how much of the asset has been kept as underlying for this Beximco Green Sukuk bond, I mean Green Sukuk security, how much? How much asset has been kept as underlying asset? If the issue size is 30 billion taka, how much of the asset has been kept as underlying?
Sir, equivalent to 30 billion taka.
30 billion, not less than this, not more than this. Okay. Now, remember, this asset does not mean the balance sheet asset. Okay, this asset means the assets which are identifiable asset, the assets of which valuation is not based on speculation. Say, for example, brand value, goodwill. These assets are not identifiable asset. But if I ask you the machineries which will be used in solar based power plant, that machinery is identifiable asset. Have we got the difference? Identifiable asset which has no ambiguity in terms of its valuation. Okay, so those assets should have value of 30 billion. Now, how much profit is expected for these Sukuk holders? You see 9% plus plus. So 9% is the expected. Now you see double plus. So what does it mean? So it means that if you see that Beximco has issued this, I mean Beximco linked SPV will issue the Green Sukuk Securities, but if the Beximco Limited, not the Beximco Group, the Beximco Limited, which is already listed in the our securities market, that company declares dividend every year. Yes, no? Are you aware of it? Beximco Limited is a conglomerate company in Bangladesh. That company has shares listed in our securities market. You have to respond. Are you aware of it? Are you aware of it?
We don't know so much about the position, but we know that Beximco is listed in the share market, sir.
Okay, I'm not asking for position. I'm just asking that
Okay,
you know that
okay,
it
sir,
is
we know
listed
that,
or
sir.
not listed. Okay.
Yes, sir, we know, sir.
Okay. So this company declares dividend every year. So this company declares dividend, and now if the company Beximco declares dividend greater than 9%, greater than 9%, say 10%, the Beximco has declared dividend. In that case, Beximco Green Sukuk holders will get 10% of the difference between 10% dividend and 9% expected profit rate here. In that case, what will be the final profit rate for the Sukuk holders?
So 9.1.
9.1%, exactly. So this is one feature, you have got it. Convertible, it is convertible into share, a specific percentage, I can't recall right now, 25% or something, 75%, I can't recall right now. So, and they can convert this Beximco security, Beximco Sukuk in some to Beximco shares at a discounted price, and there's a way that how much discount will be available. And this is asset backed. You have seen it, asset backed. Okay, asset backed green Sukuk. Now let me give you some high level summary from their summary document. As the Citibank Capital worked as issue manager, probably. Okay, you see the issue manager. Okay, so who are these? According to our learning so far, are they SPB or the issuer is SPB? Issuer is SPB or issue managers are SPB? Issuer is Beximco Green Sukuk Trust, and issue managers are Citibank Capital and Ogroni Equity and Investment. Who are the SPB here?
Issue manager, sir.
Issuer is SPB. You see, the originator is the client. Can you recall the company B I wrote on slide? Can you recall I wrote a company name, company B? Company B is the originator. This is Beximco. Okay. Now, who is the SPB? SPB is the issuer. Can you recall that I wrote SPB and mentioned that issuer has issued Sukuk Securities? That issuer now SPB is Beximco Green Sukuk Trust. It is a separate entity. Okay. Which has been created separately to issue the Sukuk Securities. Okay. Now, which projects, for which projects this financing will be used? I have mentioned 3 projects, but 2 types. Tista Solar and Korthua Solar. These are one type of project, solar power. And another is Beximco Limited's textile division. Okay. So they have some other parties. You see that there are a number of parties involved here. So I have mentioned about the profit margin rate and explained it. These are the key features. Asset-backed green Sukuk, Islamic Sharia-based securities, half-yearly periodic payment, 9% plus payment will be made in 2 periods, 6 months interval. And this is convertible or redeemable, and the denomination currency is Bangladesh Taka. and they have asked you to invest in their green Sukuk for this reason. And these are mode of offering, how they will offer their security. And they have mentioned a very high level summary of this project, why they are claiming that these are a green project. And this is the summary. You will see multi pages, number of pages document in prospectus that is available in their site. And you will get plenty of information there. So why I'm highlighting it? I'm highlighting it because they are the first company to issue the Sukuk security for the first time in this country. So that's why as an investor or as a Islamic finance student, we have to be aware of this issue. Okay. So let me close it. And now what we'll try to do, we'll try to concentrate on some specific type of Sukuk to understand how Sukuk works. Can you recall what kind of Sukuk Deximco initiated? Ijara Sukuk, Istisna Sukuk, or Salam Sukuk?
Sir,
Istisna, right? Okay. So let's explore first the Ijara Sukuk. So before exploring the Ijara Sukuk, let me refresh our mind by the concept of Ijara. What is done in Ijara? So in case of Ijara, if you take it from, say, for example, Islamic Bank, remember this is not a Islamic Bank exclusive product. This is also available in conventional financial institution. So the assets are under the ownership of lessor, and the rental payment is paid by the lessee, and that is the stream of income flow received by the lessor from the lessee. And if it is operating lease, short-term lease, what happened? The lessee transferred the asset to the lessor, and if it is capital lease or long-term lease, the lessee can offer the lessor that I like to purchase this and how much I should pay the remaining. So you probably can recall the structure from the Islamic finance instrument class. So let's try to understand that how the Sukuk is issued based on the Ijara mode of financing. So say, for example, there is a company, say company is a, say, for example, the company is a land company. The company has land. So what the company is doing, that company, I have mentioned a land company. And note that the company, land company, is our originator. Why they are originator? Because they require financing and they want to keep their assets as underlying to get the financing. Okay, what they have done now, that company has created an SPV. Created an SPV in the first step. For what purpose? That SPV, a special purpose vehicle, will issue Sukuk Securities, and Originator has created an SPV, and after that, Originator will transfer. I mean, when I'm mentioning a transfer, here I'm mentioning selling. The Originator has sold their asset to the SPV. And note that it is number 1. Now, what SPV will do, it is a simple purchase and sale transaction. Who has purchased it? SPV has purchased it. From where? From the originator, from the company who will require financing. Now, how the SPV will make payment to the originator? SPV will issue security. The security which are Sukuk security. That security has been issued by SPV. Now, they have issued the security to whom? To the interested Sukuk investors. This is number 2. They have issued certificate of participation. So Islamic investors have bought the securities. So when they have bought, what they have done? They have given the proceeds for buying the securities. And here are the proceeds. They have provided this cash to the SPV. Now, what SPV will do? SPV has this cash, and this SPV has got this and has made payment to the originator. Now, who is holding the title of the asset? SPV and the originator, or the Islamic investors, or the Sukuk investors? Under which title, under whom the title of the asset is now lying?
SPV.
SPV? Okay. Now you see, as this originator has the money by selling the asset, but at the same time, what he wants to do now, he wants to take the lease of the land what he's already sold to the SPV. Now, if originator wants to take a lease of the land from the SPV, they should make a lease agreement. Lease agreement between which party? Originator and the SPV. And this lease agreement is in this stage. So you see this lease agreement. Lease agreement. Who has taken the lease? Who has taken the lease?
Originator.
Originator. And I am mentioning it as number 4. And now tell me, for taking the lease, what should originator do now? Originator should make make a rental payment. Okay, to whom? To the lessor. Who is lessor? SPV. And originator is making rental payment to the lessor. And this is I mentioning number 5. Now SPV is getting a stream of payment in the form of rental payment from the originator. Okay. Now, does the SPV has the capability? Does SPV have the capability to make coupon payment, say 9%, to the Sukuk investors? Do they have the capability?
Yes, sir.
Okay.
Yes, sir.
So what they will do? They will make payment to them. Now you see, can you recall from the very beginning discussion of the Sukuk structure that the cash flow what Sukuk investors will receive will be dependent on the performance of the asset, underlying asset? Can you recall?
Yes, sir.
And what is the underlying asset? Underlying asset is now with the SPV. Why it is performing? It is performing because originator has taken it as a lease, and originator is using the asset for beneficial purpose, for profit generating purpose, for productivity purpose, right? So that's why it is performing. If it does not work, say if it does not work, it will not work. Okay. Now it will continue this flow. Now there is a maturity. This security, Sukuk security, has a maturity, say 5 years. And here's the lease agreement. Can you recall? Here is the lease agreement. This agreement should also have a maturity. Say it should be very close to it or very equal to this. Okay, this one, lease agreement and maturity of the Sukuk. And you see, after ending of the 5 years, what the originator will do? Originator will buy back the asset at maturity. In that case, the asset will be transferred to the, or asset will be sold to the originator. And when the originator is buying the asset after maturity, what he or she is doing, the originator is clearing all dues, including principal. Okay. Now, SPV has the capacity, SPV has the capability to reimburse the Sukuk investors both the remaining coupon and the principal. At the same time, you see that the obligations of the SPV to the Sukuk investors is made by the originator. So this is number 6, this one. Now the question is, why the originator has taken money? what he has done by this time, the landowner. Just give me a real example. Think of yourself, what you would do if you are originator. You can take an example of real estate. What we have done by this time, 5 years, 10 years. You can also take example of aircraft engine. You can also take example of automobiles. But what you have done? Any idea? You have taken money from the SPV initially by selling your asset. So you have the money. Again, you have taken your asset by leaseback, and you also have the assets. So what you have done with the money and with the asset? Have you done something for which now the productivity has got higher, and now you have by this time, by 5 years, your size will be bigger? Are you aware of the case that what real estate business do their business? What is the purpose of this financing? Any or we just have done all these things with no purpose?
এটা পারপাস হচ্ছে ক্যাপিটাল রেজ করা।
Capital, you have raised capital and you have got the chance to capitalize the money and capitalize your asset. Okay. So let me review what we have learned so far. Okay. So when you are doing Ijara, you have to make sure that the assets which will be leased out to the leasee, that is an asset which has some beneficial characteristic. I mean, if you use it, the user will receive some benefit. So there is an agreed rental payment, and there is a lease period predetermined. And Sukuk Ijara is a certificate that shows the ownership of the investors on the leased asset. Can you recall the SPV was owning the leased asset? But when SPV has issued the Sukuk security, which is Sukuk Ijara, to the Sukuk investors, who have the ownership of the leased asset now? Sukuk investors. And Sukuk investors have the right to receive the income from the leased asset. Now, if the Sukuk investors are not there, would it be possible for the SPV to purchase the asset from the originator and then engage in the leasing agreement? It would not be possible. So that's how SPV plays role. Now let's review what we have learned so far. How many parties? Broadly?
3.
3. Originator, SPV, and investors. And if I try to write or try to mention, you probably can recall from the Beximco example. Originator here is Beximco. Say for example, Beximco requires Beximco has some assets and they want to make Ijara financing, which is a kind of sale and leaseback mode of financing. Okay, and they have created an SPV, and there are Sukuk investors. Okay, what should be the first step? I'm proceeding slowly to make you understand the concept. Okay, what is the number 1 step? What should be the number 1?
Sell the asset to SPV.
Originator will sell the asset to the SPV. Note that when originator is selling the asset to the SPV, originator cannot have any intention that originator will not lease it back from the SPV. Originator must agree that I am selling this asset to you with the condition that I will take this asset as lease from you. Am I clear to you? Am I clear? My point is clear. I will not repeat. Okay. Sells asset to SPV at purchase price on cash basis. Okay. This is number 1. What should be number 2? What should be number 2?
SPV will issue share certificate to investor for collecting funds.
Exactly. Okay. SPV has issued Sukuk Securities, which represent the beneficial ownership of the asset. Okay. Number 2 has been done. And now tell me what will happen to number 3. What investors will do?
Investor will pay cash to SPV issuer.
Okay, and that proceeds will be transferred to the originator by SPV to the SPV. Okay. Now, what is number 4?
There
What
will
should be?
agreement between originator and SPV.
There should be a lease agreement. Okay. If there is no lease agreement, this kind of a structure cannot proceed. Okay. This is number 4. Who has leased out the asset? SPV. To whom? The originator. And what should be number 5?
Now SPV will collect rental payment from originator.
From the originator. Okay. And now what should be the number 6?
SPV will return back to investor the payment.
This is equivalent to the coupon payment of the investors, right?
Yes, sir.
Investors will receive the payment from the SPV in the name of rental payment or in the name of coupon payment.
Rental payment, sir. Coupon payment is interest, but it is rental payment.
Yeah, it is coupon. Coupon payment is interest.
Because
okay,
the asset
fine.
owner is also.
Yeah, it's a kind of profit they are receiving. Okay. So,
Yes, sir.
okay. So who is receiving profit? Investors are receiving profit from the SPV. Okay. Now, number 7, what will happen at maturity? SPV will sell the asset back to the originator. Okay. Now, when originator has purchased the asset, he has or she has cleared all the dues, and now SPV will repay all the dues to the investors. Okay. Now, which kind of Sukuk we just have seen? The Ijara Sukuk or Sukuk Ijara. Okay. So we have seen it. We will try to look at it, and we'll try to look at another one which is not mentioned here. Istisna. Okay.
Sir, I have
So,
a question, sir.
okay, I'm taking question. Just give me 1 second here. Okay. So why this have been compared? This have been compared. You probably can recall that bills are some financial instruments of which maturity is less than 1 year. And bonds are some financial security of which maturity is more than 10 years. More than 10 years. When and notes are financial instruments of which maturity is more than 1 year and less than 10 years. You will probably see treasury notes, and you will probably see treasury bills, and you will probably see the treasury bond. Okay. So you probably can recall that Salam is a kind of short-term financing instrument, usually 3 months or 6 months. That's why it has been compared with the bill, which is conventional. And Mudaraba kind of Sukuk, there is a Mudaraba Sukuk which has been compared with the bond because of its longer maturity. And Ijara Sukuk, what we just have mentioned, is their maturity is usually less than 10 years, more than 1 year. That's why they have been compared with the note. But there are other type of Sukuk, Musharaka, Mudaraba, convertible Sukuk. They have Musharaka, Mudaraba have not been, they do not have comparable conventional type of security. That's why there is no comparison. But can you recall that Beximco Sukuk is a kind of convertible, redeemable Sukuk? Convertible or redeemable Sukuk, can you recall?
Yes, sir.
Okay. This kind of structure is available in conventional preference stock, where you will have the chance to convert a percentage of the principal to the share, and percentage will be refunded. That's why it has been compared. And we'll take a 10 minutes break, then we'll talk about the we'll talk about Istisna Sukuk, and we'll talk about Salam Sukuk. So let me stop recording. Okay. So some concerns are rising over the Sukuk issuance. So one concern is the investors and the market participants look for the return from Ijara Sukuk, that their return should be something closer to the existing interest rate in the market, like LIBOR, London Interbank Offer Rate, KIBOR, Kuwait Interbank Offer Rate, or SIBOR. I don't know, it is indicating which country. Okay, but these are interbank offer rate. So the profit rate from the Ijara Sukuk and has been linked somehow with the interest rate, conventional interest rate. So either it is expected by the investor or the issuer is planning to link up this to convince the investors. Will it be okay to link the return with the interest rate in Sukuk? We are right now discussing about the Ijara Sukuk. We provided answer earlier. The return from the Sukuk cannot be linked to the Can you recall? We mentioned some rules. There should be no reference to interest. Okay. So when we are doing this, what we are doing? We are referencing interest with the payment. So that is a big concern. In case of sovereign Sukuk, which is issued by the government for government project, so what can the government do? Government can link their profit rate on sovereign Sukuk with some economic performance indicators like GDP or GNP growth rate for benchmarking. So what is the reason why people look for return closer to LIBOR, closer to DIBOR, or closer to KIBOR like this? Because they want to compare with a benchmark, how much they are outperforming or how much they are underperforming. That is the problem. Okay. So
will it be preferable to catch the benchmark regarding the inflation rate rather than interest?
Yeah, when you are benchmarking with inflation, inflation is not interest rate.
Yes, sir. That is
Inflation is
preferable.
considered. Inflation is considered in composition of interest rate, in construction of interest rate, right? So inflation is a economic purchasing power changing indicator, right?
Yes, sir. Yes, sir.
So it is not something like it is the interest rate, nothing like we cannot claim like this. Okay.
Yes, sir. Then that will be preferable.
Yeah. Yeah. Right.
Yes, sir.
Okay. 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 Istisna. Now, as we skipped the Istisna in Islamic finance instrument class, so it's good first to review the Istisna concept here. Then we'll go for the topic how the Sukuk can be structured based on Istisna type of financing. Okay. Now, first of all, the question is why Istisna has come, where the similar type of financing is available by Salam. You probably can recall the Salam. You have not forgot it. I'm confident. So Istisna has a good amount of similarities with Salam, but one big difference is that Salam is available for very short term, but Istisna is available for a longer term. And another critical difference is that Salam is usually applied for agriculture type of products and also projects. Okay, project is a misleading word here. But in case of Istisna, I mean, Istisna is more appropriate when you require project-based financing. You require financing for a big project. Say you want to construct a road, you want to construct a dormitory, or you want to construct a bridge. This kind of big projects usually Istisna is used. So It's not like that. I mentioned some project which you feel that these are kind of public project taken by the government. It's not necessarily like this. The project can be kind of private project. Say a company wants to build a manufacturing plant. That is a kind of project. Or a company wants to start this kind of service facility. So that is also kind of a project example. Okay. So just think of a project in your mind. Okay. So what you are, who are you? You are entrepreneur of the project. Just for an example, you are entrepreneur of the project. So that project will require labor payment. That project will require machineries. That project will require raw materials, these things. So you are very confident that your project will be successful. You'll be able to sell the services from your project or products from your project at a good price later. But right now, the money will be available later, but you do not have the money for procuring the materials, for financing the machinery or paying your labor right now. So you require financing. So you require kind of advance financing. Advance from what? Advance before your goods are being supplied to the buyers. Okay. So you need money for covering your wages or cost of input supplies. So what can be done? You can make contract to with the Islamic bank, and you can express what you need. Now, before going to what Islamic bank will deal with your situation, let me remind you that what conventional banks will do. Conventional financial institution will listen to you and try to understand how much viability of your project has. Then transfer the cash advances to your account if they are happy with your project. That is how conventional finance deals with your requirement. But when you have gone to Islamic finance will not deal with you in that situation. Okay. Now try to understand what we are doing here. You are entrepreneur. Okay. So you will start manufacturing products, or you will start generating service from there. But you need the facility first. You need the facility first. So you have to build the facility. Okay. Now, when you will go to Islamic bank, you are asking that I need this facility to be manufactured. So what can you do? So Islamic bank will tell you that I will make this facility available for you. I will make this facility available for you. So before making this, what Islamic banks will do, Islamic banks will listen to all of your requirements from you, that how, what structure you want to build, and what kind of design, what kind of requirements you want to make sure these things. You need this facility. Then Islamic bank will look for some contractors. Have you heard about contractor, subcontractor? Have you heard about this word?
Yes, sir.
So Islamic bank will look for the contractors. Okay. So Islamic bank may ask proposals from the contractors or the builders or the producers, then mention that my customer requires this kind of structure, and these are a specification, and now provide a quote. Provide a quote. How much you require, right? Contractor always mention a quote. And who is very likely to win the bid? I mean, the contractors will bid by a quote, right? Usually, who receives the agreement? Conventionally, who submits the lowest quote? Usually, okay, this is usual. So Islamic Bank will select a contractor based on the quotation, based on his profile, based on its profile. Say the project quotation mentioned by the contractor, say it is 50 million. Okay. Now Islamic Bank will add a markup with it. Who has provided this quotation to whom? 50 million for the project asked by the customer. Who has provided this quotation to whom? Give me the answer.
Sir, contractor to the bank.
Contractor to the bank. Now bank will add a margin or markup with it. Say for example 3 million. Now bank will offer to the client that the facility what you are requiring, I will provide you the facility at a cost of 53 million. Are you agree? Now, if client agrees, there will be a Istisna agreement between client and Islamic Bank. Parallelly, there will be another Istisna agreement between Islamic Bank and the contractor. Okay. Now, Islamic Bank is purchasing facility from the contractor by making advance payment. Islamic Bank is making the work done by the contractor, and client is purchasing this facility from Islamic Bank. Have you got it? I will give you more detailed picture of it, but have you got the basic structure?
Yes, sir.
Okay. Now let's review how Istisna is structured. A first Istisna contract has been made between client and Islamic Bank. This is number one. And number two is parallelly another contract will be made between Islamic Bank and manufacturer. Okay. Now, Islamic Bank will make some advance payment or make some installment payment or make a lump sum payment to the manufacturer for building the facility. Which amount? Can you recall? $50 million. Or payment on a spot, or installment during construction, or a lump sum at delivery. whichever is agreed between Islamic bank and manufacturer. Have you got up to this, the point 3? Yes, no?
Yes, sir.
Okay, fine. Now, manufacturer is taking time for constructing this project. It may require 2 years, it may require 3 years. Okay. Now, when manufacturer will complete this project, the project is the requirement of here in our agreement, it is Islamic bank. But ultimately, the project will be used by whom? The client of the Islamic bank. Okay. So after completion of the project, manufacturer will transfer the title of the project to the Islamic bank. This is number 4. Title has been transferred, but physically it will be transferred to client or Islamic bank, because Islamic bank has no need of the project physically, right? Physically, this is the requirement of the client. Okay. So you see, the transfer of the title has been handed over to the Islamic bank by manufacturer after completion of the project. Now, Islamic bank has the title of the project. Now, Islamic bank, what Islamic bank will do? Islamic bank will ask the client that your project is ready. The project for which you have submitted requisition to me, that project is ready. So in that case, what client will do? Client will make a payment. Now the question is, the payment can be made on a spot at delivery, I mean after completion of the project, or deferred lump sum, or make a deferred payment on installment or installment. Total amount will be deferred or installment. So it has been, you see that the transfer of the title has been made, and at the same time when it is done, title has been transferred. At the same time, the manufacturer, I mean the contractor, has transferred the project to the client, I mean the Islamic bank's client. Okay. And client will make the payment to whom? To Islamic bank. And you see, has there been any cash financing, or there has been a kind of business agreement, purchase and sale transaction, either between client and Islamic bank and manufacturer? Has there been a cash financing, or there has been a business transaction, purchase and sale?
The purchase and sale transaction.
So that is how this all Islamic financing products have been structured in this way to avoid the cash financing. So there will be no direct cash financing. It is very common in Islamic finance. Okay. You probably have written a question on your first midterm, Tawarruk financing, which is applicable in case of providing cash financing. And scholars and practitioners have raised a number of questions on this Tawarruk financing. So you probably have written those issues, that what are the concerns over this Tawarruk financing. So have you got this Istisna contract, so that we can proceed for how Sukuk can be introduced for against the Istisna contract or based on Istisna contract? Can we proceed?
Yes, sir.
Yes, sir.
Okay. Istisna Sukuk, this kind of Sukuk is, we just have learned, based on Istisna financing instrument, and it is usually used in case of big project, say real estate development, large industrial project, construction of power plant, purchasing ships, purchasing aircraft. And when the production and delivery is completed, the buyer, I mean the client, you probably can recall the client. Okay, the buyer is here, is not, okay, the buyer is here, the client, okay, Islamic Bank client starts repaying the price in deferred installment, which are passed on to the Sukuk holders as their payment. Okay. Now, when I have mentioned Sukuk, to whom I should invite to issue Sukuk? You cannot forget. I just have mentioned one entity repeatedly. For issuing securities, I have to invite an entity in middle of the client and the
Contractors.
contractors will issue security. Contractor will issue Sukuk. I recall the basic structure of Sukuk.
Issue.
Who will issue? Obviously, issuer. Issuer is a common word, but I mentioned one entity name who will be issuing or who will work as a issuer.
SPV, sir. SPV.
Right, exactly. SPV, a special purpose vehicle. Okay. So remember, SPV is not exclusive term in Islamic finance. This is a very common term in business world. Okay. And this is how the structures in transactions are made. So you need to understand the structure to avoid the complications. Okay. So you see the structure, how Istisna Sukuk can be designed. Okay. So what we are learning? We are learning if your client, if you will be working for investment bank, or if you work for a manufacturing company and you are assigned to design a Sukuk for them, you have to keep these basic structures in your mind. So some steps can be increased, some steps can be decreased, but some basic structures should be kept in your mind. And you already have noted that in a Sukuk, there are multiple parties involved. So we are trying to simplify the structure to make it understandable in a narrow point, but multiple parties are involved here. Okay. So we like to understand that how Istisna Sukuk can be designed. So in the very initial step, what SPB will do. SPB will issue certificate to the Sukuk holders. And what Sukuk holders will do, Sukuk holders will pay price to the SPB. Now, why SPB has issued securities? Note that SPB has got a client who is requiring some project, and SPB and that client, this SPB has made or has found some manufacturer or contractor to provide to build the facilities for the end buyer. So after getting the payment from the Sukuk holders, what SPB will do? SPB will make the payment to the end buyer, or SPB will make payment to the contractor. SPB will make payment to the contractor. So how much payment will make? How much payment will be made to the contractor? So note that if there is a payment, say SPB will make payment which is equivalent to the construction cost. So that amount will be made to the manufacturer. Then manufacturer has received payment. Manufacturer will take time from you. Now, how many Istisna contracts have been made here? There are three parties with SPB. One party is client, the end buyer, another party is Sukuk holder, and another party is manufacturer or contractor. How many Istisna contracts have been made here? 2 or 3?
Sir, 2.
Two Istisna contracts have been made. With whom? One is with end buyer and another one is with manufacturer or client. So the funds which have been raised by SPB from the Sukuk holders will be paid to the contractor, or you can think of manufacturer or producer, whatever it is, or the provider. Then at the same time, the title of this asset, title of the asset or the title of the facility is sold to the end buyer by the SPB. Now, when the manufacturer will complete the project, it will deliver it to the SPB, but SPB will not keep it with it. SPB will get payment from the client and deliver the project to the end buyer. And when the end buyer will receive the delivery of the project, they will make all deferred installment payment to the SPB. Now you see that there has been a one point that one deferred installment payment, but the payment can be continuous, payment can be kind of advance, payment can be in installment, payment can be deferred, payment can be lump sum, these things. From that payment, the SPB will make coupon payment to the Sukuk holders. So it is not always deferred installment payment. So customer can make regular installment, and from that regular installment, SPB will make payment to the Sukuk holders, and Sukuk holders will receive the coupon payment. So at the end of the period, all payments due to the Sukuk holders will be made clear by the SPB upon receiving payment from the buyer. Have you got it, how it works?
Yes, sir.
Okay. Now let me write it, let me relate it with what we have learned in case of Beximco. Okay, let me ask you. Who is the client and buyer in Beximco Green Sukuk bond? I mean Green Sukuk. Who is the end buyer here?
The solar plant project.
Okay. So solar project, then Beximco textile division. Okay. So actually they are under the originator. Okay. And who are SPV? Can you recall the SPV name? Beximco Green Sukuk
Beximco
Trust
Trust.
something.
This-
Okay, so Beximco Green Sukuk Trust. They are working as SPV, and some managers are operating here. City Capital,
Citibank
Obroni,
Securities.
they are working as managers. Okay, managers for what? Managers for issue managers. Issue of what? Issue of Sukuk Securities. And you see that Beximco requires solar project, Beximco require a textile project. But you see that who will build this project? Some manufacturers, some contractors, some engineers, or some engineering company, some power generation construction company will build this facility. They are the manufacturer. Have we got the example of manufacturer contractor in Beximco Istisna Green Sukuk bond?
Yes, sir.
Okay. So remember, I'm probably doing mistake, and many people are likely to do mistake. Sukuk is itself a security, right? Sukuk. So people try to understand it as a bond, Islamic bond. Okay, but I should not mention Sukuk bond. It's a kind of, what kind of problem it is? Repeating words. Okay, so I should not do this. I should either mention Istisna bond, so or Istisna Islamic bond, or I should mention Istisna Sukuk. Okay, so why I'm because when you will be writing on your script, please do not do this kind of mistake what I'm doing. Okay, so you see now at this time, what is happening? Beximco Green Sukuk Trust is floating the Sukuk bond. Still, the subscription is yet to be closed. Okay. So what they are issuing Sukuk. So we are the Sukuk holders. For example, we will be the investors. So we are getting the Sukuk certificate and we are making payment for it. I can't recall the face value. If you're interested, you can look for it. Okay. So what the Beximco Green Sukuk Trust will do after taking the proceeds from us, they will transfer the payment to the Beximco, I mean, this project originators or the manufacturers?
Manufacturers.
Or the contractor, right? Okay, so they will make payment to the contractor. If they transfer payment to them, what will happen? They cannot do this, right?
Cash payment will be.
They cannot do this. Okay. Okay. Now, when this construction of solar, Kortoa, then what is another name? Another project name? One is Kortoa, another one is? These are some rivers name, right? Okay. So one is Kortoa, another one is another power project, and another one is textile. Okay. So when these facilities will be completed, I mean the completion of the construction of these facilities will be completed, this will be delivered to the SPB, and SPB will deliver this to the Beximco as the originator of the client, as the originator of the projects, and originator will by this time make installment payment, and those installment payment will be used for making coupon payment to the Sukuk holders. Got it?
Yes, sir.
So we need to have a very basic understanding that how this financing product will be working, or how this Sukuk will be working. Okay. Now, Salam Sukuk, can anyone share what is your understanding of the Salam? Then we'll talk about the Salam Sukuk. What is the basic, a basic idea of Salam financing instrument? Anyone please respond?
স্যার সালামটা হচ্ছে অ্যাডভান্স পারচেজ গুলো
Okay, so
ম্যাচুরিটি থেকে মানে গুডসটা ডেলিভারি
so interested buyer is making advance payment to the supplier or seller, which will help the supplier or seller to make or to produce his or her products, and the purchase price the client or the buyer is fixing with the seller. And what is the benefit to the buyer for making this advance payment? Buyer will be able to sell the same goods at a higher price after the term of the term, or after a certain period. This is a basic structure of Salam, right? But one particular thing you need to understand, that it is for short term. Okay, we cannot forget it. Okay. Now, how Salam Sukuk works? So, this slide should be discarded. It is wrong. It is from Istisna Sukuk. It is not a Salam Sukuk. Okay. So we'll talk about Salam Sukuk. So let's take an example of oats producer. Can you recall the oats? I mentioned about oats when we are talking about the Salam. So oats is a product which is manufactured in winter countries. Where the temperature is very low, they can manufacture the oats very well. So I'm writing here oats, and I'm writing here buyer. Say they are the farmers, okay, who will be selling. And let me write here the buyers are Kellogg's. Okay, are you aware of this company? Are you aware of Kellogg's?
Yes, sir. Yes, sir.
They are the leading producer of oats. Okay, so you see, first of all, Kellogg's, it is out of the steps mentioned here. Let me give you very primary introduction. So the Kellogg's have made contract with the oats suppliers that I require, say, 50 metric tons of oats, will you be able to produce for me? So they have made they have been made agreed by the Kellogg's. Now they require money for producing oats. So they have created an SPV. Now, actually, it is the responsibility of the SPV. It is the responsibility of the buyer to create the SPV. Okay, so SPV has been created by the buyer. Now, what SPV will do? SPV will issue securities, Sukuk Securities. So they have issued Sukuk Securities, and Sukuk holders, we investors have made payment, or say we are X, Y, Z investors, they have made Sukuk proceeds payment. And now SPV has received. Now SPV will give the proceeds to the Kellogg's or the oats farmers.
Oats farmers.
Oats farmers, they cannot give it to the Kellogg's, right? Okay. Now, so oats have been produced and they have got the advance payment. By this time, Kellogg's are here direct sellers. If Kellogg's are not the direct sellers, what they could do? They could make another Salam agreement, parallel Salam, with other say wholesalers or dealers that I will sell this amount of oats to you at this price. Okay, I'm not inviting that complexity. Okay, so advance payment has been made to the oats farmers. Now oats have been produced by this time, right? So you see that first Salam contract has been agreed between oats supplier and the SPV. For what? SPV will make advance payment to the oats supplier, and oats supplier will transfer or will sell which amount of oats to the SPV? 50 metric tons. Now you see that it cannot be like this, that the client is requiring 40 MT and SPV is taking 50 MT from the suppliers. Do not take it in this way, because SPV has been exclusively created here for meeting the demand of the client. Okay, so this amount should be equal. The amount of production is actually the amount required by the buyer. So this is a Salam contract between the SPV and the oats supplier. Simultaneously, another Salam, parallel Salam has been agreed between the buyer, I mean the Kellogg, and the SPV. For what? They will make the advance payment or the installment payment or the deferred installment. Okay, I got disconnected. Can you hear me?
Yes, sir.
Okay, I got disconnected. What I mentioned last, I mean, what you listened last from me.
Another
Another Salam contract.
right.
Okay, another Salam contract between SPV and the Kellogg. Okay. So when the oats production is complete, what oats farmers will do? Oats farmer will transfer the title to the Kellogg's or to the SPV?
SPV.
To the SPV first. then SPB will transfer the title of the Kellogg's of the oats to the Kellogg's upon getting payment or payment is already done.